Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon, all. Ira Epstein of Linden Associates with your agriculture update for this Wednesday, the 16th of August, 2017, about 2:45 p.m. Central Daylight Time. Well, an interesting day. The dollar down today because if you saw the Fed release notes of the meeting on July 25th, 26th, Fed seems certainly, if you will, not in agreement amongst themselves as to what to do with interest rates. I think what they agreed with is the running off of the balance sheet, and they'll probably announce that in September. Everything else, toss a coin. It's up for grabs. When you take a look at the grains, you're still getting selling pressure in the corn and the wheat. The beans managed to stabilize, but that's all that you can say about it. Cotton stays under selling pressure along with sugar, and all of the energies continue down. You know, I mention those because sometimes that impacts ethanol prices and the like if you're watching what's going on. So now what we've got is a new break low as of today at 917.25 on the weekly chart, which has been coming down for about 7-8 weeks or so. And the question has been, will you come in and challenge these lows or not before the harvest begins? That's one of the things I'm looking at. When I come to an area chart, a daily area chart of just closing prices, you closed today at 925.25, yesterday at 24.25. So you can see the market has fallen approximately $1.19. So that's a pretty good drop. When you just look at a daily bar chart, you can see the price action down to 921 from 1047. A heck of a decline that's occurred. And on the swing line, you have had a funny pattern. You've had a higher high, a lower low, and what caused this swing without creating, if you will, higher highs and higher lows is the fact that on this day was the USDA report a week ago Thursday, and the market was taken by surprise by the size of the yield that the market is talking, acreage, and bang, away you went down in the market, and you're still going down. Now, whether this one-day bounce amounts to anything, I wish I could tell you. I can't. What I can tell you is the 18-day average is chasing in quick steed here, the 100-day average, and it's losing on average, if you take a look, about 5 cents a day. So it this week might, depends how prices go, it might be able to get a bearish crossover by Friday, the next 2 days. I don't know. Next week it could happen, but what if you had a big rally up? So, you know, you just don't know. You got to wait and see how it's going to work because it uses the 18-day average of closes. When I come over and I look at the Bollinger Bands, you've been riding the lower Bollinger Band, and you're starting to move away from it at this point, but you have an embedded reading. Therefore, you know what I put on today's rally reversal? Nothing. A bounce in a market that's bearish. Get it high enough, keep that embedded reading in place, and I say the pros will sell back into this market. In the meal market, you have the embedded reading, a new break low for the whole move. If the market does rally, and it didn't today, it closed lower, I think the pros are willing sellers until you lose the embedded status. In the soybean oil, you went right down into the 100-day average of closes in green. The lower Bollinger Band, 2 days in a row, 3 days in a row, to be honest. You hit it there, and here, and today you finally closed back over it, but you're very oversold in the market into a minor support area. In the corn market, you're developing. Now, let's count how many days we have the embedded reading. Both numbers today are under 20. They were both under 20 yesterday, but they were not the day before. Therefore, you have an oversold condition that could embed tomorrow if both numbers stay under 20. The odds favor that this market is going to do what? Well, in all fairness, it's just sitting on the, right now, it closed literally on the lower Bollinger Band. It doesn't have to bounce away. It can stay there. If it were under it, I'd say it would be up. It's not. It just stayed right on it. In the wheat market, you did get back under the lower Bollinger Band with an embedded reading. I hope you're all learning that what I developed in stochastics that is different than anyone I've ever seen do it in the use of an how I teach to use an embedded reading is important. You tell me what happened from the time you locked in. I know people are buying here. They're trying to be heroes. Your work is saying, no, I'm trying to sell here. If I'm wrong, I want to be with that stochastic reading. That's the concept of trading. You're trying to trade with the momentum forces, with the trends at times as well. In the sugar market, in embedded reading, bearish. This market just lower highs, lower lows, no change here. Coffee oversold. Guess what? Here's the coffee market yesterday. Did not hold the 100-day average of closes. It was also not oversold. Now today, the market runs to that lower Bollinger Band number. Doesn't quite hit it, by the way. The low today was 133.60, 133.40, and you're oversold. The market is now at the point where I think the pros are nibbling now, starting to take money off the table. Do they want to play for that last 20 points? They might, but why? You've won the day. In the cocoa market, oversold 2 days in a row under the Bollinger Band. You know what the odds of staying under the Bollinger Band tomorrow are? 3%. 97% chance it won't. That doesn't mean that it's bullish. It just means in relation to the Bollinger Band. Why is that? Well, the rule of thumb that I teach is this. Number one, the algorithm, and it's proven, 95% of the time, the way that it's developed, the way that the math works, the market will trade within, not outside of these bands. I came up with a rule of thumb that says you can count each consecutive day as one of those numbers of the 5%. Can you get beyond 5%? Absolutely. Do I see it on a regular basis? No. Do I see it, though, during the year? Yes. It can go more. And I know the amounts that the max I've ever seen. I mean, I keep up with this, obviously. But 2 days in a row tells me what? Why, number one, sell under a Bollinger Band when the market's going to try to work back over it? That does not mean the market can't go lower and get to the right-hand side. So when I see people saying, I'm going to buy that because it's under it, that doesn't come from me. I wish you the best with it. You can keep going lower, and that's what's wrong. It's one thing to cover a short. It's a very different thing to go long. And when people tell me if a market's good enough to get out of a short means you're able to get long, I go, okay, that's an interesting theory. What do you base it on? And everybody's got their own way. I don't walk on water. I can be so wrong. In fact, I am wrong a lot. But I'll be more right than probably the vast majority of people watching this video because of experience, not because I'm a smart guy. When you look at the cotton market, higher high, lower low, oversold, tracking down like this, there's no way to catch a trade like that, in my opinion. You had to sell the exact high up here. You had to sell the upper Bollinger Band, which is something I clearly don't teach, and you have to be able to hold on and hope that it's going to go and keep going. Maybe you can do it. I can't. In the cattle market, you lost the embedded reading yesterday, so I'm looking for price and the 18-day average to come together. In other words, I think price and the red line are going to hit each other soon rather than the market just embark and go down to new lows. Am I going to be right? I don't know. I'm going again from the norm of what I see with that. In the feeder cattle market, it's not the same market as the live. You've got lower highs, lower lows. You have a market that is correcting in the present tense, still is oversold. It's trying to correct it with a minor bounce, if you will, that didn't hold very well. You were down 325 points. So the resistance, let me ask you a question. Here's the chart. Here's the next day. The resistance, as I see it, is the combination of the 18 and 100 day, the 100 day being the green, the 18. The market today challenges again both those numbers, can't do anything with it, and falls back. Now, what would reverse this trend temporarily, and I'll give you a number, what the bears cannot afford to have happen is taking out yesterday's high. That could then give you higher lows, higher highs over the upper Bollinger Band and cause some short covering. In the hog market, gee, I'm so surprised. Let's go to yesterday. Here's the market over the upper Bollinger Band in an overbought condition. The odds of this market staying over that band today, the way that I teach the theory of Bollinger Bands, you can shoot holes in me, maybe I'm wrong, is 4% of the time. Market gets over, opens higher, makes a new high, and collapses under it. That's all that the work says, that it's not going to stay over it, okay? 96% chance. 95% chance that it'll trade within the bands most of the time. Got that? So you take one of those percentage points away because the market was over it. And now the question is, can the market embed? No, it's just plain overbought. One of the numbers is under 80. So when I put that all together, I try to come up with game plans in a way that you can understand it, and I teach it in my charting course. It starts with the swing line that you see me do here. Then I'm going to add moving averages. There's plural, not just one and not just the ones you're seeing here. You certainly have gotten used to the slow stochastic. Bollinger Bands you've gotten used to, but you're missing a key tool. And that tool is window envelopes, and I don't show that here, not because they're so special. There'd be too many lines on the chart, but they look just like that with everything that I give you. Then I show you how to put the numbers on the chart in the course. Now, it's all videos. So you're coming in, it's online videos. I don't have to send you a disc. You don't have to go through all of that. You're able to come in, work at the pace you need, and then I back it up in the mornings with another video that I do each morning to show you 40 charts. I'm going to cover all the securities, all the indices basically. I'm going to walk you to the currencies, the interest rates, the metal markets. I'm going to take you into the livestock, the grains, the softs, and the energy. So you're going to get a whole thing, and I do it in the same way each time. And I'll harp on these different studies, and I embed them in you. I make you understand what you've got. If you have the time, I have the time. It's all video course. It's easy. The first chapter in each course shows you via a PowerPoint. I create the concept. I go to charts and show you it. But guess what? Often I cover the name of the chart and the values. And then I'll bring them back so you can see it, because I don't want you swayed. Gee, that went up, this went up. No, it's all about looking at the chart today and trying to figure out what to do. Guess what the other part is? Money management risk. So if you're interested, the whole course is $99.95, and you get with the charting software that's worth $100, and then you get access to my research for 30 days, a $60 value. So you're getting all in all $160 of value thrown in to a $99 course. And here's your kicker. I'm going to raise the price of this next week. So I said I'd do it last month. I forgot. I wish I could give you any other reason. I forgot to raise the price. We're now going to raise it. We're marking it down here, and we're going to kick it up next Monday. So take advantage of it if you like. How do you do it? Call my staff, 866-973-2077. Have your credit card ready. You can go online at www.iraepstein.com. Go under the word education. You'll be able to read about the course. I've got some short videos that explains everything. 2 facts pages that tell you about charting software and so on. Or you can click right up here if you'd like. And if you click up here, you'll see this icon will take you right to the pages that you need, and away you go. You know, you got a couple of weeks left before we get into what we call the real season of trading, and that's when the kids go to school, the traders come back from vacation, and volume will pick up. I'm Ira Epstein. You watch this. I hope you enjoyed it. That was bad grammar. You have a good day.